the people who tend to do best in the market are the people who lose their passwords. Just chill. Stop looking at the chart. If you're spending your Saturday staring at a chart, we got a whole nother conversation we got to have. Instead, understand the asset that you own. Because if you bought Bitcoin and then all of a sudden Iran, Israel, and the United States start dropping bombs on each other and you're selling your Bitcoin, you don't understand what you own. The more uncertainty, the more chaos, the more that we get towards this like fourth turning, the more valuable Bitcoin is going to be. And so to me, that is ultimately what we saw. Is we saw an uneducated emotional response. Bitcoin sells off, comes right back. Everyone chill out. You're fine. If you went to sleep on Friday, you woke up on Monday, you don't even really know what happened.
Anthony Pompliano starts with a powerful point. Geopolitical events are surprises by design. Recent events like the U.S. flying B-52 bombers on unexpected routes shocked the world, but that's precisely the point. These moments are meant to confuse enemies, but also end up shaking investors, markets, and average citizens alike. The shock causes uncertainty, and in investing, uncertainty equals fear.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, I think the first thing is you got to remember that geopolitical events like this are a surprise by design. So there's now reports coming out that the United States sent some B-52s to Guam. Everyone's like, oh, where are the B-52s? Let's look. They're going west. At the same time, the U.S. from Missouri sent 9 B-52s east. No one saw it coming. They got in, they dropped the bombs, and they got out. No shots fired at U.S. servicemen and women, which is incredible feat. 37 hours, if I remember correctly, flight. Now, why is that important? It surprises the enemy. It surprises the American people. It surprises the investor. So the surprise factor, immediately people, it's like the ground starts shaking in an earthquake. You're like, wait, what's going on? Let me just get my bearings. So what do? That uncertainty leads to a quick degree of fear. If you fear, what do? Sell, sell, sell. And so you see algorithms and humans both sell. Now, this happened over the weekend, though. You can't go sell your stocks. You can't sell a lot of these assets because the hours of operations of the traditional exchanges. So naturally, what you get is you get a big sell-off in things like Bitcoin, etc. As I predicted over the weekend is that it will come right back because ultimately it is a shock factor. So you see it go down and then it goes back up. And so what people I think have realized is, hey, everything is good. Everything's going to be fine. Now, of course, they did announce a ceasefire, which is helping the assets recover as well. And we saw stocks go down on Monday. We saw other assets go down. So it is really just people in response. They didn't have anything else they could sell. So if you want to raise dollars, if you're worried, what do? You sell in almost like a panic, an emotional response to the news, and therefore you lose money. I mean, that's what happened, right? Is if you were selling at 100 and now it's at 105, that wasn't smart. And so I just think that is the general thing. And we've seen this happen before with a lot of the Middle East conflict. When Iran shot, I think it was like 300 missiles at Israel, then same thing happened. Bitcoin sold off and then it came back. And so it goes back to this idea that the people who tend to do best in the market are the people who lose their passwords. Just chill. Stop looking at the chart. If you're spending your Saturday staring at a chart, we got a whole nother conversation we got to have. Instead, understand the asset that you own. Because if you bought Bitcoin and then all of a sudden Iran, Israel, and the United States start dropping bombs on each other, and you're selling your Bitcoin, you don't understand what you own. And so it comes back to this idea that you have a asset that is decentralized, that is censorship resistant, that cannot be seized, and it provides sovereignty for individuals, companies, financial institutions, and countries. The more uncertainty, the more chaos, the more that we get towards this like fourth turning, the more valuable Bitcoin is going to be. And so to me, that is ultimately what we saw. Is we saw an uneducated emotional response. Bitcoin sells off, comes right back. Everyone chill out. You're fine. If you went to sleep on Friday, you woke up on Monday, you don't even really know what happened, right? And that's the way that it should be. It's just keep a long time horizon. Bitcoin is not supposed to be a speculative tool. Yes, people do speculate with it, but ultimately Bitcoin is to be held for decades. And if you do that, that tends to be in a much better position. Bitcoin has now entered the Goldilocks of volatility. And what I mean by that is Bitcoin, when it is a 150 vol asset, institutions can't hold that. They can't see something go up thousands of percent and then drop 90%, right? It's too volatile. Bitcoin also is not that interesting to people if it only goes up 2 or 3% a year, right? So what you need is a higher degree of volatility than you could otherwise get in treasuries or stocks, but you need a low enough volatility where institutions can wrap their head around it. And Bitcoin has now entered into that area. Bitcoin, over the last 5 years, the compound annual growth rate is somewhere around 65%. That's very attractive. The best hedge fund in history, Rentech, that is what they returned. So you now have entered, right? Just think of it, as volatility has fallen or as the compound annual growth rate has fallen, you now are entering a zone where the absolute best hedge fund in history is. So that crossover is pretty important because now it is fathomable to people. They're like, oh, okay, 60%, that's high. But I at least have seen something like that before. If you show up and you're like, yeah, compound annual growth rate is 240%, the fact that it's such a high percentage, they deem it's risky and therefore they won't put it in their portfolio. I think the institutions that I was fortunate enough to work with who backed those funds, one of the things they liked about the structure that we created is that we put Bitcoin inside of a venture fund. Now, why do they like that?
I see.
Because to them, they were only getting quarterly marks. So 4 times a year, they would be updated on what the whole portfolio was worth. So the private companies plus Bitcoin. If we had gone to them and said, hey, we're going to buy Bitcoin in every week, every month, every quarter, we're going to give you these updates on just Bitcoin's price. And sometimes it's going to be up hundreds of percent. Sometimes it's going to be down 50%. They're like, we can't put that in our portfolio. It's too volatile. So the way that we were able to get Bitcoin into some of the portfolios of these organizations was we basically put a wrapper around it that was able to obfuscate the actual volatility of Bitcoin.
Stablecoins are just another form factor of the US dollar, but they offer superior utility. As Pomp says, it's not a new dollar, it's just a better version of the same dollar. They matter immensely because they are onboarding millions of users into the digital asset world. Stablecoins are the gateway drug to Bitcoin and crypto for banks, fintech, and even governments.
The whole idea is that you can put it inside of a structure and you can hide the volatility. Now what's starting to happen though is investors are saying, wait, the volatility is at a level that I actually want my portfolio. I want it to outperform my traditional assets and I can wrap my head around it. So they understand Bitcoin better. They understand what the volatility is and they see the trend. We have the benefit of time. The compound annual growth rate is coming down. So you know that, hey, today it's at 60 over the last 5 years. 5 years from now or 10 years from now, maybe it's at 30 or 40, maybe it's at 20, right? Whatever the number is, it's going down, but you want to be able to capitalize that because it still outperforms your regular portfolio. And so I think that is really this idea that Code 2 is talking about where they're like, okay, now investors are starting to put Bitcoin into the portfolio because the volatility has cooled. And so yes, individuals, the reason why they were attracted to Bitcoin and why most of the people watching or listening to this front ran all the institutions and countries is because you wanted max volatility. You actually did not want the volatility to cool. You wanted up 1,000%, down 80, up 1,000%, down 80. You're cool with that. The institutions are not. And so now the volatility has come down. That's why you see individuals, I wouldn't do it, but other individuals basically push way out on the risk curve. In crypto, they're saying, okay, well, this Bitcoin thing, that doesn't move as much as Fartcoin or whatever other coin. I'm looking for max volatility. Let me go to, shitcoin land, right? And so again, it goes back to what is somebody trying to optimize for? The institutions are not optimizing solely for upside volatility. What they are optimizing for is kind of a well-rounded asset. They want something that has some degree of asymmetry, but also they want a thing that's not going to go down 80%. They want something that is resilient. They want something that now is starting to check all these boxes that Bitcoin brings to the table. They put it in the portfolio and Sharpe ratio goes up. They actually get some non-correlation or lower correlation between their assets in their portfolio, and they still have a high enough degree of upside in Bitcoin that it outperforms some of the other assets, and that makes it attractive. They're incredibly important and they don't matter at all. Same thing at the same time, right? Why do I say that? They're incredibly important because they are the way that many of these traditional financial institutions, politicians, emerging markets, they're all getting onboarded to this new digital world. They don't matter at the same time because they're just dollars. Dollars have existed for years, right? It's not some new crazy thing. And so
is it just like a digital dollar? I'm trying to understand.
The best way to think about it. If I ask you, give me $1 of physical cash, you're going to hand it to me. If I say to you, send me $1, on Venmo
Yeah.
or from your bank, you still send me $1, whether you handed it to me physically or what I would call an electronic dollar.
Yeah,
that you
but I
sent.
probably pay some in fees, so it's not
Possibly, but it's still $1. It's just in a different form factor.
Okay.
A stable coin is now just another form factor, which is a digital token on a blockchain that represents that same dollar. So whether it's physical, electronic, or digital,
And-
it's still $1.
And what, it's backed by my like digital dollar, my physical?
The dollar that is on the blockchain is backed by US Treasuries.
Okay.
So they sit there, you can go, you can get them back, right? It's got the value behind it. And so the whole idea, again, is they're important because they're onboarding people to the digital world. It now is an ability for you to move without hours of operations, low cost, anywhere in the world, immediate, etc. So
Oh,
basically the dollar gets more utility, but it doesn't matter because it's just the dollar. So you're opening access, you're improving the usage of the dollar, but ultimately the actual asset itself is just $1.
Wait, and just really quick, why is it different from just sending a digital dollar? If I want to send money to Bulgaria right now, I can do it via like PayPal. Why is that different?
Maybe.
Maybe.
It depends on what the country is. It depends on when you send it. It depends on what the fees are. I mean, there's a lot of stuff in there, right? So, for example, let's say that on the weekend, I may or may not have recently been involved in a transaction where people had to send wires. Well, the wires don't actually get sent till the weekdays.
Oh, okay.
And
it's
so
faster.
there's hours of operations, right? Everyone has had the experience in business that they got to get to the bank or get online and send the wire before 2 p.m., right? You know, there's all these things that happen that, again, are somewhat antiquated. If you move all of the money into a digital token that now can just move freely at any time for no cost to anyone, now what you're doing is you're opening access, you're reducing friction. There should be more velocity of money in the system. That's ultimately good for economies and for individuals.
Do the banks like this?
Well, the banks don't like it if they can't participate.
Are they
So-
participating?
So when Tether and Circle are out there having a field day,
Right.
and the banks are sitting on the sidelines because they can't touch crypto.
Right.
The banks are advocating. They're saying we should create rules. This is nonsense, yada, yada, whatever. But recently, two things happened. One, the banks who have been very clear to say if we get the green light, we definitely jump in the stablecoin game. JP Morgan came out. They announced, I think it was called the JPMD, I think is what they called it, which is like their version of a stablecoin. A little bit, some changes they made, but it's their version. Bank of America, Brian Moynihan, he said that they're going to get in the game if they get the approval. And then the bank regulators just came out and they said that they are now going to reduce or remove this idea of reputational risk to a bank if they participate or touch things that are in crypto.
JP Morgan launched their own version of a stablecoin. Bank of America's CEO recently said they'd join the game if regulators gave the green light. And U.S. regulators just relaxed rules around reputational risk for banks involved with crypto. The tide is turning. Stablecoins represent a stepping stone to a digitally native financial system, and banks are racing to catch up. As Pomp puts it, they're incredibly important, and they don't matter at all. Why? Because it's still the same dollar, it's just moving faster, cheaper, and more efficiently than ever before. Please like and subscribe.